US tariffs announced came in more than double ahead of expectations. It's about 20 to 30% across the board, and this brings it to the highest level in over a century in the US. So shocks like this tend to hurt when the economy is weak. If you look at the underlying fundamentals, whether it be housing, consumer sentiment, a lot of this was rolling over as it was. An announcement like this left less of a buffer in the market, as this economic shock is going to hurt a little bit more. Reining in the deficit and increasing tariffs was to get to the next stage of this, and that's tax cuts and deregulation. So this is something that the administration needs to start to talk about more and more to perhaps calm the markets down as well. Is this a negotiating tactic? Is this the worst case scenario where from here countries will come and actually negotiate with the administration and you get good news going forward? Just to remind investors, pullbacks are normal. You get about 3 to 4, 5% pullbacks here, you get 10% pullback on average. I think what's really happened here is the pace of this pullback. It's just been a constant, barrage of news. Our objective is to identify market leadership, and market leadership is always changing. So we use days like today to reassess our view and our conviction in a lot of portfolios. And we also use days like today to see what is market leadership, what is doing well today. Perhaps some more defensive sectors like insurance, perhaps the exchanges, you could expect more volatility in the market and they benefit. And even European defense is up today. So again, we use days like today to think about that next leg of the market, and we're trying to identify market leadership as it evolves.